My name is Pratik Kodial. I'm the founder and managing partner for Tapasya Investment Partners. This video will cover the following topics: overview about me, the fund, its investment philosophy, selection framework, operational framework, performance, and service providers. But before all these topics, let me walk through the vision of my fund. My vision is to turn every dollar into $16 in about 20 years. The focus is on the destination, not so much on the journey. Now let me actually tell you a little bit about myself. I have over 3 decades of investment experience. I've had hands-on experience working in several industries, which include financial services, retail, technology, consumer goods, etc. I caught the investment bug at a very early age of 16 during the boom cycle in India. It seemed like making money was very easy. It never is. After several failed attempts, I decided to learn about investing. That's when I came across Warren Buffett. I am now an ardent fan and a devotee. I follow the principles of value investing, identifying companies at fair prices. I'm an engineer by education and I've worked in several industries and varying roles of responsibilities, giving me a unique edge in beating the market. Combined with my passion for finance and temperamental advantages honed through several failures and successes, gives me a unique advantage of beating the markets. Now let me talk about the fund and its investment philosophy. As far as the fund is concerned, it's a global value fund. Each stock is purchased as owning a percentage of the business. Market volatility is our friend, and we take advantage of it looking at mispriced securities. We employ a margin of safety as a means of limiting downside risk. We concentrate on our best ideas. We minimize our use of leverage. We limit portfolio turnover to avoid or reduce frictional costs and taxes for investors. There's also a great deal of alignment of investors and manager incentives. And that's where we come to our fee structure. We believe our fee structure is a very fair fee structure. There is no management fee. There is a 25% performance fee after a 6% hurdle rate. There is also a high watermark. A very large portion of my liquid net worth is invested in the fund. Now let me talk about the selection framework. We start with looking at opportunities using stock screeners, 13F filings, readings, podcasts. Opportunities can come from anywhere. We need to keep our ears and eyes open. For these opportunities, we then look at whether these businesses, are businesses I can understand, whether they have a moat, which basically means can they stand the test of time. Post that, I look at financial metrics for at least 5 years or more. Our source of information are 10Ks, investor relation websites, investor presentations, software tools such as Ticker, etc. So multiple sources. I look for consistent revenue growth, high gross margin, free cash flow growth, return on capital employed, low shareholder dilution, strong balance sheet, etc. After that, when it passes through this filter is when we start looking at a price filter. This is to make sure that the company we are planning to buy is available at a fair price. To look at that, we look at several metrics. My preferred metric is free cash flow yield, defined as free cash flow divided by enterprise value. Enterprise value is defined as market capitalization minus debt plus cash. Finally, once a company passes through all these filters is when it is evaluated across the rest of the companies within the portfolio. This includes opportunity cost, i.e., should the new company be allocated capital versus a company that already exists within the portfolio? Is there any overlap within any existing company? To make sure we are diversified. Sizing consideration are also looked at before making the final buy decision. Hopefully this gives you a view on how companies are selected across geographies. Now let's look at operational philosophy. As previously discussed, we concentrate on our best ideas. The fund is very unlikely to hold any more than 15 positions at any point in time. This, I believe, is optimal to beat the market. At the same time, it does introduce more volatility as compared to the market. We have a low portfolio turnover to avoid frictional costs and taxes. This helps in maximizing gains over the long term. Alignment of investor interests is a consideration in all operational decisions. My own capital is invested alongside yours. I eat my own cooking. We have a performance focused fee structure, no management fee, 25% performance fee after a 6% hurdle rate, and also a high watermark. This aligns incentives to keep focus on achieving improved performance. Now let's look at performance. I'm happy to report that the performance you see here, which is primarily since inception, which is August 2022 through Q3 of 2023. As you see, we have beaten the S&P 500 with a very large margin. Since inception, we have delivered over 20%, while S&P has delivered at the same time 2% only, that is inclusive of dividends. Year to date 2023, the fund has delivered 29% versus the S&P at 13%. In regards to our country allocation, as you see, the US represents 62% of total assets, followed by Netherlands and China at 22% and 12% respectively. Account statements are shared with the investor on a monthly basis. Fact sheets such as above are published on a quarterly basis. I also send investors my thesis on each of the investments. This is done every couple of months. You can visit my website tapasyafunds.com for examples of these documents. Now let me talk about our partners and service providers. We are partnered with NAV, who helps us with reporting, distribution of account statements that reflect individual performance. Wells Fargo is our corporate bank. Interactive Brokers is our prime broker. We are finalizing on our audit firm, which will be decided by the end of this year 2023. Hopefully this gives you a good overview of what our fund does. Once again, our goal is to beat the S&P 500 over the long term. We are a global value fund and look to invest in quality companies across the globe that are available at fair prices. We have an incentive structure that is fair and structured to drive performance. We hope to hear from you soon. Thanks a lot and have a great day. Bye.